Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, May 27th, 2022. So, just another totally normal week is in the books here. A little bit of a squeezy week, certainly. Nice big green weekly candle. So, what just happened? What is this? What's going on? Did the world all of a sudden become a happy place? Not so much, not so much. But before we dive in, I do invite you guys to check out either pause this video and then go check it out, or watch this video and then go check it out afterwards. Check out our video from last Friday. I think I'm going to call this video To Trap or Not to Trap Part 2, but last week was To Trap or Not to Trap Part 1. And we talked about this bottoming structure here on SPY. So I'm just going to cover it really quickly because it's a very classic bottoming structure. But basically, you have this undercut low on Friday, right? That was the end of the world Friday. That Friday, this candle right here that has this wick, even though it doesn't look like it, it actually made a higher close than the previous day. And then that set the stage for a potential reversal, because what this does is that little box down there, put yourself in the shoes of longs. Where's your stop? All the longs have the same stop, 385. Anyone who wanted to short and thought we were going to get a breakdown also shorted below 385, right? So when you understand that, you draw your straight line across 385, and then you see this wick and the close making a higher close than the previous day, you understand that that is a significant change in the pattern. Even though it may not be reflected in the trend, if you just look at moving averages, it's never going to show up in your moving averages, because moving averages are the slowest possible way you can measure momentum. But now, well, what do we have? The trap has been sprung, right? So before we had a trap down here at 385, that kind of implied that we would test the top part of this swing range right around 408.5, and now we've exceeded it. The question is, how much higher? I ran a couple of symmetry levels here on SPY. Well, I ran symmetry and I ran retracements, and you'll notice that a lot of these levels overlap here right around 426, 427. So the yellow line here is symmetry. The red line underneath it is a retracement extension, or an extension. The green line stretching across the screen here is a previous support level, now turned resistance, so it lands up right there. And the blue line, which also overlaps with that level, is the daily 50. So and I love levels like this because you see how chunky that is? You have a moving average there, you have a previous high and low, you have double Fibonacci there. That's as chunky as it gets. Excuse me. So it does kind of make for a magnetic attraction level. And then we see what's up at 426, 427. If we can get higher than that, then we'll have a game on our hands. But let's not put the cart in front of the horse. We're still about 12, 13 points away from that, 12 points away from that. So that's the level that I would mark on my charts. Now, you can simplify it. You don't need to have all the fibs and whatnot, because guess what? They all overlap with the daily 50. So as long as you have the daily 50, you're good. You're good. My instinct says that's a sell, but I would ideally like to see us get to this level, get this momentum indicator up here, hook, and then give me some sell arrows. Ideally against that level. That would be perfect. But leave an open mind that this could go higher than most people think, and the reason being is this is just a short squeeze, right? So what we're seeing now is trapped shorts in a very, very crowded short trade. And the market is very good about exterminating one side of the trade when it gets too crowded. So I'm spending a lot of time here on SPY, but really I think it's all that matters. I'm going to share one more thing that I'm looking at, and then that way you can track it alongside. And that's going to be the dollar. So why is this bounce different? Why is it different than every bounce that we've seen before? One huge component of that, there's a couple of components to that, and we cover that in the premium videos, but I'll share one of them with you that I think is really important and just easy to track. Leave a level on your charts, 104 on the dollar, the DXY. And you can leave an alert or just watch it. But as long as the dollar stays under 104, the bulls are going to be able to run. The reason being, you see these highs over here? Doesn't matter which one you choose, any one of those highs. And then you have a higher high. So price went up, but you see how the indicator went down? I'll adjust the indicator so you can see it more clearly. You see how the indicator went down? So you have a high here, and you have a high here, right? The indicator should look like price. So you have a high here. There should have been a higher high here. You see how price went up, indicator down? Okay, that's part one. That's a momentum divergence. So now you understand 104 was a breakout level. You broke out of it on negative momentum. So underneath 104, that's a bull trap. That essentially is the opposite of what I just showed you on SPY. On SPY, we had a level. We pierced below, closed above. Here, you have a level. You pierced above and closed below. So it's the exact opposite. One's a bull trap, one's a bear trap. So as long as the dollar stays below 104, the bulls are going to be able to play ball, even if it goes sideways from here, right? And I do have it against a major level here, so maybe it just goes sideways, but it doesn't matter. As long as it stays below 104, the bulls will be in charge. So on SPY here, I do think it gets to those upper levels, 420, 426, 427, just because the market, is a little bit of a curious child, and it will want to see what that level reacts like when it touches it. The main thing I would stress going into next week is try to have some price discipline, because right here on the hourly chart, which is on the right, you are against a major resistance level at the moment, number one. And then number two, and more importantly, you're a mile away from your hourly 21. Your hourly 21 will be a place to buy it, but you are about 80 points on the SPX, or about $8 on the SPY away from that. So if you were to chase it up here, and you got to trade your plan, but if you were to chase it up here, you'd have to be good with a pullback all the way to 406. So it looks right. The peripheral markets look right. I do think it gets to 426, 427, but try to have some price discipline along the way and try to buy the support level on a momentum reset. The last thing I'll say is if you're looking to try to outperform the market here, then you're going to have to go into the things that have been sold off the hardest. So I'll give you a quick example. If you look at XLU, the utilities, those look great. The XLU setup looks great, right? But they're not going to outperform in this particular slice of time. Why? Because this is a short squeeze, and it will continue to be a short squeeze. So then you have to put yourself in the mind of, well, what were they shorting? Were they shorting utilities really? No. They were shorting the semiconductors, and they were shorting retail, and they were shorting tech, and they were shorting the FANG stocks, and they were shorting IWM. Right? So that's where you're going to get your outperformance. If you don't want to trade any of those things, then I would just stick with the indexes for now. But put yourself in the mindset of a short, at least for the next week, and ask yourself, if I were short, where would I be forced to cover? And if you focus on those places, and in my opinion, something like semiconductors is a good place to focus, then I think you can start to outperform the SPY. At the end of the day, if you want to trade SPY, I think that performs, that captures the spirit of the move as well. So hopefully this was helpful to you guys. Go check out that video from last Friday if you want to see a little bit more dynamics around, looking at the price action and kind of reading between the lines, reading the tea leaves a little bit of the price action, so you don't get caught on the wrong side of this. Because put yourself, on the other side of this. It's gross. If you were short here, it's essentially like the market crashed. It just crashed up, right? So you really want to be able to kind of, especially in these markets that are so volatile, be able to read between the lines and not just say, hey, we have a downtrend, let's just stick with the downtrend no matter what. Because by the time that a downtrend shifts here, this thing's going to be up another $10, and it's not going to feel great, right? So I do invite you to go check out last Friday's video. It'll have the same title as this one, so it's easy to find. And as always, if you have any questions, comments, concerns, grievances, or complaints, leave us a comment down below. And don't forget to leave us a like before you go watch a cat video on YouTube. And if you like our content, it surely helps us if you subscribe. So we certainly would appreciate it. All right, guys, that's my time. That's as much as I got for you. So I look forward to seeing you for the next Friday video. Have a great long weekend. Cheers.
Without simpler trading, I could not have financial independence. This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me